Thanks for joining me. Are we ready to go? I think so. If so, anyone wants to ask me to look at any specific markets for you, please do. And I'll try and run through them and do the best I can. While I'm waiting for any questions, I'll probably start with looking at the S&P because we're at an historic day today in the S&P. We are testing all-time highs in the S&P futures anyway. The E-mini S&P futures is what I tend to follow. And we should be looking at a weekly chart at the moment. Yes, we are. If I scrunch this up to 2007, there you go. That red line at the top there, the high in December 2007. I think it was December. No, October. October the 12th, 1586.75, and the high today, 1585.75. So we've come to within one tick of the all-time high. Needless to say, all-time highs are probably about the biggest resistance level on a chart. It's major. So today could be a bit of a deciding day as to whether the S&P now takes a big tumble and we have a huge double top in place, which would be enormously bearish, or whether we close above it. Probably tomorrow night's close is maybe even more significant than today's close, being a Friday, being a weekly close. A close above that sort of 1587 level would be bullish, would mean the uptrend continues. A close below it would be a bit of a worry, and we could have a potential double top in place. So can't really say any more until we see what happens, but we are at a huge level. Doesn't get more historic than this, really. The day, I mean, we're overbought all over the place. The weekly chart's obviously very overbought. This is the daily chart, which is obviously very overbought. You can see there at the bottom. I'm looking at slow stochastics here. Very overbought indeed. Sorry, it's 4-hour chart. Beg your pardon, 4-hour chart. And this is the daily chart, which again, it's overbought. We've been hovering around overbought now for over a month, but we've still continued higher. So, just because we're overbought doesn't mean we sell it, but it certainly is something to take into account when you look at the historic levels that we're trading at now. So enough of that. We'll just have to keep an eye on the S&P and see where it goes, but probably being long at this level is not the safest bet in the world when we're hitting historic highs. The other thing that's caught my attention is the yen, dollar versus the yen, which I'll just put on the screen now. Okay, so the weekly chart is here, and if I scrunch this up again, you'll see that from, don't need that. You'll see that from 2007 was when we had quite a bear market in this dollar yen pair. 124.14 was the high in 2007. We got down to 75.35 in 2011, end of 2011, and we've been rallying up from around the end of last year, so a good few months. Strong rally, obviously. I think everyone knows about this. What is interesting is we've now recovered 50% of that loss, so it's a big level. 50% is a good Fibonacci level here. We've hit it. 99.74 was the level. We got to 99.88, so just, 14 pips over the level. Yeah, it's a big level. We're backing away from it now, so something to watch there. It's very overbought on the weekly chart. It's very overbought on the daily chart. That goes without saying after such a big run. Today we've made a new high. At the moment, if we were to close here, we've got a lower close, so that's a reversal day. Yesterday's low was 98.91. If we happen to close below 98.91 today, we've got a key reversal day, which is a new high followed by a lower close. That is often a reliable indication that the market has run out of steam, at least. Some people use it as a reversal indicator as well. So again, big level for the dollar yen today. Let's see what happens. Really only a close, 100 is always a big psychological level. It's a big round number. So for me, unless I see a close above there tonight, or preferably tomorrow night as well, Friday night, end of week close, then I would suggest maybe we've topped out there for a while. Some targets, put some Fibonacci levels on here. Let's have a look. That's a good point. So there we go. That'll give us some targets on the downside. 94.76. We could really put one here as well. Actually, this is the last decent run up for the last few days. So 98.19 will be our first target. But we could certainly see 97.76 within the next few days. Worth watching that one. 4-hour chart. Just going sideways really at the moment now. 4 hour is indicating that we should come lower. Stochastics are quite bearish. So let's see what happens. Just going to move that away. Hovering sideways at the moment. Gold. I'll have a look at gold. This is a gold chart going back to 2011. Obviously we had a huge run up, as you know. Got to 1921 and then pretty much sideways in the last, well, certainly through 2012, from the end of 2011 up until today, fairly sideways. We're at the lower end of that range. I put a trend line in. I'm going to just remove this and blow this chart up a little bit. There you go. Gives you a very clear channel that we've been in, as I say, for over a year now. Getting on for a year and a half. We're at the lower end of that channel. We've tried that on a couple of other occasions. Middle of 2012, we tried that 3 weeks in a row. And we, even down here, back in, where's that, September, October 2011, we were down 1535, 1522, 1527, and then last week 1540. So it's all within that sort of mid 1500 area. Mid to low 1500s. We bounced really nicely off there last week, but we're coming back down again, so who knows, maybe we're going to test this trend line a few times now. 1537 is the actual trend line. 1540, 1530, so you know, let's see what happens there. We start to break below 1530. What's that low here? 1522, 1527. So if we start breaking below this trend line at 1537, we're going to probably be testing these lows at 1527, 1522. If we can't hold on here, then that's pretty significant, and we could see quite a big sell-off if we fail to hold above here. But the weekly stochastics are very oversold at least, so probably worth trying some longs down there with a tight stop below 1520. Daily chart, not quite, is the stochastics at least a middle ground, but I mean, you know, you can see that's the downtrend that's been going on for a few months now. So we'll just have to see. You know, that's going to be an important support level. I'm guessing WAMs in the stock markets might have some effect. If the stock markets do start to plunge after testing all-time highs, then I wonder if that might send gold higher. Could do. 4-hour chart for a shorter-term picture. Well, we got very overbought, of course, when we hit. I don't know if you follow my gold reports. I had 1587, 88 as a target to get short with stops above 91, and we just held below 91, so that short trade has worked. But now we're starting to get into oversold territory on the 4-hour chart as well. So, and we're hovering quite nicely around 1558 support level, just moving sort of 4 or 5 points either side of that at the moment. So yeah, I'd say there is a decent chance of a pick-up there in gold as well. Who knows, stock market's lower, dollar yen lower, gold higher, could happen. It all would tie in quite nicely. Perhaps, what else can I look at here? The euro. Euro, whoops, weekly chart, there we go. Try and scrunch this up a bit, get a bigger picture. Okay, so from mid-2011 down to mid-2012, big plunge, and then from middle of last year up until February, we had a nice bounce. Couldn't hold above the 200-week moving average. We closed 1 week above it, and the next week we just plunged below it, broken lower, and then we hit some good support in the low 127s, and we've bounced again. So what happens now? Well, from the weekly chart, the stochastic's looking quite positive. You can see we're bouncing around between that range, the low 127s up to the mid 131s. That's been holding us at the moment. Daily chart. 131.15 was our target. We got there. I was suggesting shorts around that 131.15 area with a stop above 140. In fact, the high is 131.38. So if you are still short from that level, just starting to look at a bit of profit. Yesterday the trade worked quite well, but today we've come back up to that level. Tried to push through it, didn't quite make it through the stop level. And you can also see 100-day moving average and 55-day moving average there, almost at exactly the same point, around 131.50. So you can see 131.50 here, longer term Fibonacci level, and then on the daily chart we've got the 100-day and 55-day moving averages at the same price, and we've backed away from there now. So daily chart looking a little bit overbought. Maybe that's enough. Maybe we're going to start pulling back on that euro versus the dollar. I wouldn't say we're going to fall too far, but we might just be done for that bounce now. We've had a good bounce. What is it? 1, 2, 3, 4, 5, 6, 7 days or so. So it's been a really good rally, but probably a little bit overstretched at this stage now. Just update these fibs. This is just a 4-hour chart, so a very short-term view, and you can see it's been holding its fib levels quite nicely. 130.46 was where we bounced off, and went back up to 131.38. So my best guess would be we start drifting lower to the 130.46 level now, and we'll see what happens there. It's good support, but if we don't hold on there, start breaking through the mid 130s, then my next target would be 129.88. We'll see what happens. We could fall another cent from there and even get down to 128.96. I'm guessing that would be far enough, and I'm guessing that 128, sort of 129.00 area might well be a good buy. Yeah, that would be around here. That would be around. Okay, well there you go. That coincides with the 200-day moving average and a big longer-term Fibonacci level there as well. So if we fall as low as 129.00, I wouldn't rule it out. That might actually be a decent level to hope for a bounce. 55-week moving average there as well. So that ties in quite nicely across those time zones. Dollar versus the that's the South African rand, if I'm not wrong. Let's have a look at that. Not something I follow, so just give me a few minutes to have a look at it and see what sense I can make of it. Okay, this is the weekly chart. Put some fibs on there. I always like to throw some fibs on to give me a rough idea. And you can see that we had a big plunge from 2008 down to 2011, and we've recovered 50% of that move. We tried to get above there. 50% level was 9.2073. Okay, so we did try and push above there, but we didn't hold it for long, and we're coming back down again. Goes to the weekly chart. It's sort of indicating we've done enough on the upside. I can see some trend lines that will need to go on there, but I'll do that on the daily chart. Okay, so at the moment looking like it's hitting profit taking, but I'm sure on the daily chart we can put a trend line on there and give ourselves a target for that. Let's have a look. Okay, let's try some trend lines. That looks fairly valid. This one might be better actually. Yeah. And that one looks a wee bit better. Okay, so put some fibs on there as well. Okay, that's what I like to do to give me an idea of what's going on. So we've got a good Fibonacci level here at 8.90, hovering around there. 100-day moving average here as well, 8.88. So we're finding some support here by the looks of it on the daily chart. Let me just open this up a bit so you can see a bit more clearly. Okay, this is a really good level. We're hovering. Let me just do that. So around 80.90 down to 80.80, there is support, and we are holding it. We have tried to blip lower, but we haven't today. We've got to 8.85, so we've tried a little break, but it's looking all right now, and we're now back above that 80.90 support level. So short term, this looks quite positive actually. We may have seen enough on the downside. In fact, I like that 80.90 support level. I like the fact that we tried to break below it and couldn't hold it today, and we're now pushing back above there. So we'll have to see where that closes, but initially it looks quite positive if we start to break lower, and if we can't hold above that 100-day moving average at 8.88 and we break the day's low, which is 8.85, then yeah, the next target looks like it's down here, 8.76, which ties in with the lows of February, 8.77, 8.78. So I'm guessing that would be the next target really. There doesn't seem an awful lot in between here and there on the daily chart. And if that doesn't hold, then the obvious level would be the downtrend, sorry, the uptrend line, which started in mid-September. So it's a good one. It's a few months long. That looks like really good support, and we should be very, very oversold at that stage. I wouldn't be surprised if we don't even make it that far. But you've also got the 200-day moving average there, around that where are we now? 8.66. So yeah, around the 860, 870, 860 area. Very, very good support if we fall that far. My guess is the immediate future we won't get that far, and certainly looks like we could have a little bounce. What's it looking like on the 4-hour chart? Yeah, that's looking more positive as well. So that backs up the theory that maybe we've bottomed out for the time being. I like to use Fibonacci's as well, you know, to give myself some targets. First resistance level, 8.97. Not sure how accurate that is actually. Let me have a look at something else. I quite like those levels actually. 8.95. That would be our upside target, our first upside target. Above there, 9.01. Maybe we'll be a little bit overcooked there. I don't know. But initially, it's looking all right. You see that last bar there as well. That's a reversal. We made a new low, closed very strong at the top of the candle and above halfway through this red candle. So that's quite bullish. That can also be used as an indication of a reversal. So very, very short term. Yeah, I think we might have seen the bottom in that pair. Longer term, yeah, we could actually be looking at a decent rally. 9.08. Where does that work on the 4-hour chart? Okay, so 9.06, 9.11. Don't see any reason why we can't get there. We'd have to have a look at the chart again when we get there, because I've got a feeling that might be as high as it goes, but can't rule out a bounce to there. Definitely not. Back to the weekly chart, just to remind myself. Yeah, weekly chart is more bearish. Let's see if I can put some longer term trend lines on here. Yeah, that one looks quite nice. Oh, look at that. There you go. That's all the reason in the world to buy it. There's your long-term trend line. Goes all the way back to August 2011. If I just highlight that, you can see how nicely we haven't managed to close below that trend line. This is a weekly chart, by the way. We haven't managed to close below that trend line on a weekly basis at all. And that goes all the way back to August 2011. So it's very much a longer-term trend line. You can see we've just bounced right off there this week, almost to the exact pip. In fact, I've got the trend line at 8.85. I've got the low 885. I mean, it couldn't be any closer. So, although that weekly stochastic is bearish, I'm not going to pay too much attention to that. I'm going to suggest that we bottomed out in that pair and that we're going to go higher. Whether we test previous highs, I don't know. Can't rule it out. But certainly, I wouldn't be surprised to see it around that 907, 911 area. Oops. Just one more quick look at the daily chart just to clarify. Yeah, No, okay, I think that looks alright. I think we could well have bottomed out. Let's see what happens. That's quite interesting, actually. Thanks for that one. Aussie dollar, yeah, happy to look at the Aussie dollar. Let's have a look at that one. Looks like a long-term bear flag. Sorry, are you talking about the rand there? Let me have a look. Looks like a long-term bear flag on the weekly. Let me have a look. Just go back to that one. Starting in December 2012. Sorry, I don't follow you. Am I missing something there? I'm not 100% sure what you mean. July 2011. July 11. Oh, here. I see what you mean. This formation here. Yeah, you could be right. I guess this is what you're talking around down here. Looks like a double bottom as well. We got a low here at 655, a low here at 650, pretty much 655. So that was a nice little double bottom there, which was quite interesting. Matched with the stochastics, so I guess that would have given you a bit of a clue there. Okay, that's interesting. Yeah, thanks for that. All right, let's have a look at the Aussie dollar. Again, not one I follow regularly, so just give me a bit of time to have a look at it and try and figure out what I think is going on. Weekly chart isn't telling me anything at all. As you can see, it's just basically gone sideways through for the last 6 months or more. Daily chart. Yes, I remember this. We were having a look at this one. Hang on a sec. Just wondering if I'm looking at it the right way around. No, I'm not. I thought I wasn't. Okay, pardon me. I was getting myself confused then. Right, start again. That's better. Right, that's better. Looking at it completely the wrong way around and getting completely confused. Okay, so spot Aussie. That's a bit better. Okay, we've had a good run there. Now, I do remember looking at this the last time I did a webinar for FX Street, and there was some sort of bullish pattern on this, wasn't there? Let me try and remember. I haven't had a look at it since. I can't really remember what I said, but the webinar has been recorded, so you can go back and have a look. It was around the beginning of March, and we spent quite a lot of time on this one. Ah, yeah, there it was. There was a inverse head and shoulders here. Can you see that? Let me just open it up here. This is exactly what we're doing here. It was the beginning of March when we were looking at this pattern, and it was an inverse head and shoulders. It looked quite bullish. So there's the right shoulder, there's the low. Ah, yeah. Do you know what? I think it might have been on March the 6th of March. I bet it was March the 6th that I did this webinar. That pattern looks familiar. We were looking for it to come off a little bit and buy it, and I said as long as we held above this point here, which was 1.018. We could carry on higher. Well, we did carry on higher. We actually then came lower here, 1.02. Okay, so we just about held above that level, and then we took off. So there's your inverse head and shoulders, which is quite bullish. I hope you can see that. If you can't, tell me and I'll try and make it more clear. But there's your right shoulder. Sorry, there's your left shoulder. There's the head, and there's the right shoulder, and the right shoulder held above the left shoulder. So that was your bullish indication. Then you would have put a neckline on there. And once you broke the neckline, we hovered around here for a little bit. Then we took off. Thank God I got that right. Wow, we did take off. Okay, so it took a while. It was a bit more of a sideways movement than an upwards movement. But you can see how if I can try and highlight that trend line, you can see how we have held it at least You would have thought actually you would have got a bit of a faster acceleration than that, to be fair. But anyway, it really struggled higher, didn't it? Well, we got to 105. We got to here, and then we pulled back. Anyway, pulled back. We've tested that trend line. That's just about held. Admittedly, we did come down to 103.48 when the trend line was at 103.48 when the trend line was at 103.69. But hey, 20 pips. I don't think anyone's going to worry too much about 20 pips. And then we've taken off again after retesting that trend line. So all looks good at the moment, although we probably are a bit overstretched. I mean, the 4-hourly stochastics certainly look overstretched. So now we've got to go back to the longer term charts for a bit of a picture on that one. Let's go right back to the weekly chart. Start all over again. Okay, so there is I'm going to take that trend line off actually. I'm not sure that looks correct. Let's have a look at this one. Okay, there you go. That's a nice trend line. We've broken above that one. So it's all looking pretty positive this week. It's really only this week that it's taken off then. It's taken taken a long time for that to actually work. If I take this trend line off, change that to red because it's difficult to see when it's green. Okay, so there we go. Yeah, we've had a good run as we would have hoped, but look at this trend line going back to September, so 6 months or so. We're just testing it now. That trend line comes in at exactly 1.059, Our high today is 1.0582. So we've hit it and we've come back down. Now that probably does look quite toppy actually. Let's have a look at the daily chart, see if that matches up. Okay, got all sorts of old trend lines here because I haven't looked at this for a month or so. Let me take that off. Take that off. Okay, bear with me. Okay, there's that same trend line. Bit clearer now on the daily chart than it is on the weekly chart. Again, I'll just turn that to red so you can see it more clearly. I'll open this up. So there we go. There's a big trend line. Look how we've hit that. So on the daily chart, which tends to be more accurate, we've got the trend line at, again, 1.0579, the high 82. We're coming back off there. Look at that divergence on the stochastic. Divergence comes when the market rallies, but the stochastics don't really follow, and they haven't really. We were obviously very overbought here at the end of March, beginning of April, and we had a little sell-off. I would bet you that held a quite big fib support level. Yeah, there you go. Look, 38.2%. That held really nicely there, bang on. And then we took off. 38.2% is always a nice support level to look for. So we bounced off there nicely, and then we took off and hit the trend line. We've topped out. Probably that is going to be enough on the upside for now. So we'll stick some fibs on there to give ourselves some downside targets. So assuming that 105.79 or call it 105.80 area holds, and it is looking increasingly likely that it will. Already today we've been down at 105.01, which is around about the same as these highs here, 104.97, 104.97. So that 105 area is the initial support, and that has held. But below here, 104.72 looks like a good support level, or a good target at least. We'll see what happens when we hit that. So that's quite interesting. Let me go back to the 4-hour chart now. Oh yeah, so the 4-hour stochastics, I don't tend to look shorter term than the 4 hours because it just gets too confusing really. But the 4-hour stochastics are backing up the idea that we've topped out and we're heading lower on this one, having hit that trend line. The daily stochastics are also not the most bullish I've ever seen. Yes, they're pointing out higher, but we haven't managed to get back anywhere into the overbought territory. So I would call that divergence. Yeah, I think it's too risky to be long this Aussie dollar at this stage now after such a good run up from that early March time when we had that inverse head and shoulders. I would definitely be looking for a return to 105.00. How did that work today on the 4-hour chart? So that 105.00 area was hit this morning before we reached that 105.80 high. So okay, we're only just starting to come off that high now, so we can easily get back to 105.00 at some stage today or tomorrow probably. But below there, we'd be looking at 104.72. I'm guessing that might be enough. You're looking to short it, are you? Okay, well, good. That ties in with what I personally think. Anyway, in my opinion, I think you're probably right. Might short that one myself, actually. A nice profit in the very, very short term would be down around that 105.00, 104.72 area. Good chance of a little bounce. Who knows? We could even bounce back up to that 105.80 area again, and then you'd look for the double top. And the thing is, up around there, you can sell it, and you know you've got a nice tight stop. What's this high? 105.99. So a tight stop above 106.00. You know, you're looking at 20 pips, 25, 30 pips maybe on a stop level. And then 106.25 would be the next target, because that's the previous high. So I tend to agree. I tend to think we could actually ease off there. Let's just try and see what's happening down here. When you put this trend line on here, put it in red again. Okay, what are we looking at now? Daily chart. So, you know, perhaps this is what's going to happen. Perhaps this is our channel. This is going back to summer of 2012, getting on for almost 2 years now. Certainly over a year and a half. And you can see a very clear channel there. Very clear. The lines are almost parallel. Maybe that is it. Maybe that is you know, quite a significant high for the first half of this year at least. And maybe we are going to take a bit of a plunge. But these are the levels to look for: 104.72, 104.04, and then this is quite a good one, 103.5, which was that low that we saw. Let me see, that was the beginning of April. There's no reason to think we can't get as far as 103.5 at least. We'll have to see what happens and what sort of patterns emerge when we get down there. Do I trade off the 4-hour chart? Yes, I definitely do trade off the 4-hour chart. I mean, what I'm showing you today is weekly, daily and 4-hour. I generally just stick to those. I think it gives you a clear enough picture. You know, you can go into 1-hour charts, 15-minute charts and everything else, but I'm not the kind of trader that holds positions for minutes. I'm a more hours to days kind of guy, so that's short enough. And for me, this cancels out all sorts of noise, the 4-hour chart. I think it's about short term as I want to go. I find the slow stochastics are very reliable on the 4-hour chart. You know, they really help with timing. I don't really look at the moving averages on the 4-hour chart, to be fair. But sorry, what am I looking at here? This is the daily chart. So I've got moving averages on the daily chart, yes. But the 4-hour chart I do find very useful. And I don't use moving averages. I do use Bollinger Bands actually, because I find the Bollinger Bands work quite well on 4-hour charts. Not so well on other time periods, not so well on the daily and the weekly at least. So I use them as a guide, and you can see it's worked quite well today. It seems to have held the top side at least. 104.59 is the mid-range, so that probably ties in with what we're looking at here, does it? 104.72. Okay, so yeah, would be interesting. Who knows? Maybe we'll be looking at it. Maybe we'll be looking at this Aussie dollar down at the 101s later on in the year, but too early to say at this stage if we go that far. What do I use Parsar for? Sorry, Parsar. I don't fully understand that. You have to explain that one to me. You've lost me, I'm afraid. Oh, the dots. Oh yes. Sorry. What are these called? Parabolics. Is that what you mean? I do use them. I use them as a guide. I don't really. They're not a hard and fast rule. Someone showed them to me, and I keep an eye on them because they do seem to work quite well. They give you an idea of the trend, at least. And I must say, when you break those levels, you do get a decent enough move, continuation move. So they're often, I guess you could say, as an acceleration point. You could use them as well. So again, it's just one of those things that I throw into the jigsaw puzzle and see what happens. Just looking at them. I don't look at them enough, actually. I'm glad you pointed them out, because I need to pay more attention to them, really, because I do think they can work. 4-hour chart. There we go. Look, I've even put them in blue stars to try and make myself pay more attention to them. And look, they do work well on the 4-hour chart. You can see that. So it's always, if these parabolics tie in with Fibonacci levels and trend lines and moving averages, then it just gives you that extra bit of confidence in the level. Because basically all you're looking for with charting is to see what everyone else is seeing, and that's why I look at different time periods. If I'm looking at a big level on the 4-hour chart, I like to see it on the weekly chart, because if it's a big level on the weekly chart, that just gives you a bit more confidence, because it means the big players who don't trade hour to hour, they trade day to day, week to week. It means they're looking at that level as well, and that will just more weight. Do I consider trend? Yeah, I always consider trend. If you follow me on my charts, I do trend arrows for the 4-hour, the daily and the weekly period, because trend is one of the most important things, there's no doubt about it. But I do like to try and spot turns in the market. That's something I enjoy doing, and I think we spotted one there in the Aussie today. I use Fibonacci's a lot. I find them very useful, but I have Fibonacci's upon Fibonacci's and upon Fibonacci's all over the place. And when they intersect, which I think you call areas of confluence, something like that, then I tend to rely heavily on them and use them as bigger areas in my daily reports. Okay, so that's the Aussie. If there's anything else anyone wants me to look at, have we still got time? Not sure. How do I handle economic data and news? I completely disregard it. I completely ignore it. The reason for that is, and before I got into charts, I used to think charts was a complete load of rubbish. I just used to think, how can you look at a chart and a picture and it tells you the future? I mean, it just seemed absurd to me. But then I started studying it, reading it, started to realise it actually made sense, or maybe not made sense, but it definitely worked. And then I got a very good teacher who took me to the next level. And what I started to discover, or what I personally now believe from experience, is that the news tends to follow the technicals. Maybe the technicals is just an indication of demand and supply, and the news event creates the trigger for the move. But what I tend to find is the market has already started to either top out or bottom out or move in the direction. It's the news event, it's just the trigger that sets off the big move. I'm often spotting tops and bottoms. I mean, for example, today, if the S&P does hold 1486 and does start to head lower, then in a week or so there'll be some big news event everyone reads as bearish. Well, guess what? We've already topped out. We're already probably 1 or 2% off the highs. People are already nervous, and they've focused on a news event that they suddenly see as very, very bearish, which may not have been very, very bearish a month or two ago, and then the selling starts. Well, in my opinion, it was already mega overbought. It already hit a major resistance level. The clever money was already getting out, and the news event just forces the acceleration of the move. That's my personal opinion through too many years of doing this. So as I say, I don't look at the news at all. I think news is interpreted in the market how it wishes to be. I don't think. Obviously, a major unexpected event will change the course of the market. I don't deny that, but I've got no way of knowing what's coming, so I just don't really pay any attention to it, and I just focus on the charts, which is the only way that I think I can get a head start on the move. Anyway, enough waffling on about that. If we've still got time, GBP, no, I'm happy to look at GBP, yeah. In fact, I was going to look at that anyway, so let's have a look at the cable. Always worth looking at cables, good market. Where are we? Right, here's the weekly chart. I always like to start on the weekly chart. Haven't looked at this for a long time, so again, please bear with me. What's that telling us? Not a huge amount. Had a good rally for a few weeks after a huge plunge. Okay, so weekly chart looks fairly optimistic. Nice little uptrend for a few weeks. Let's have a look at the daily chart now, try and get a better grip of it. Okay, I'm going to take these fibs off. So we've had a good run, 38.2% fib, always a nice resistance level. That comes in at 154.24. We managed to get to 154.08, so to within 15-20 pips of the target, getting a bit overbought on the daily chart to be sure. Yeah, I do like these 38.2% retracement targets. Don't forget, this is a bear market. This is a bear trend. If we need any reminding, we can look at the weekly chart. So in effect, at the moment, we've had a good bounce, but this is just a bounce in a bear trend. And 38.2% is always a nice level to look for as a resistance in a bear trend, as a bounce. If this is just a correction, then we probably will hold the 38.2% level, and we have so far. We are looking overbought. Is it worth being long any longer? Probably not. Probably a bit too risky. Let's see what the 4-hour chart says. 4-hour chart, yeah, not surprisingly, very overbought. Has been for a while. So really, if you've been long, you've done very, very well. And I'm guessing probably not worth being long at this stage. If you're trying shorts here, we've missed the best price to sell at. Obviously above 154.00 would have been nice, but we're going to have to see it above 130, 154, 154. We're going to have to see it close above 154.24. I mean, really, what's the high of this candle? 154.50. Yeah, it's going to really have to get above 154.50 before I'd start getting bullish again. 4-hour chart-wise, it is saying we're done, and it does coincide with that Fibonacci level. So let's see if we pull back, and if we do, we've got another cent on the downside probably. This 152.72 level ties in really nicely actually with this high in March, which was 152.69. So that's a really nice target. 152.72. Let's see if it goes down there. I would suggest that's a strong possibility at least. Why do I not like 1-hour charts? Not that I don't like them, I just find that sometimes there's too much data on it, they get a bit confusing. I just find the 4-hour chart much clearer. It seems to just cancel out a lot of noise. Maybe I'm just not short-term enough trader to look at 1-hour charts. And so I just don't really pay any attention. My reports are based on a 24-hour outlook. That's what I write for my clients in the banks and everything else. So I find that 4 hours is enough to give me the biggest support levels of the day that will matter without finding too many of them. Just one last point on that cable. 153.63 was the previous high that we saw last week. That looks like a weekly high. So keep an eye out for 153.63. We've actually just tested that on that candle there. Do you see that? That low is 153.62 on the last 4-hour candle. So 153.63. If we start to go below that, I would suggest that that's just another confirmation that we have topped out, and we'd be looking at 152.72 as the target. Pound versus New Zealand dollar. All right, yeah, let's have a look at that. I don't think I've ever looked at that, but I'll give it a shot if we've got time. GBP, NZD. Here we go. Just looking at the S&P, it's easing back again around 1581 and 1582, and that dollar yen is coming back a little bit as well. So who knows? Maybe we have seen the top for the stock markets. This could be a historic day. Top for the stock market, perhaps 11th of April. Let's see. I think I've got another webinar in a couple of weeks, so we can revisit that then. Don't forget to register for it. Here we go. This is the pound versus the New Zealand dollar. Wow. That is not a trend you want to get in the way of. Oh my goodness. Okay, you don't want to get in the way of that one. So we're going back to 2001 here, and that's just been one straight line. Blimey. There's just no reason to get in the way of that. I would not be brave enough to be picking bottoms in this market. Good Lord. No. I mean, what can I say? I think these are all-time lows. Blimey, certainly looks like it. Yeah. All-time lows. There is absolutely no reason. Well, I'm certainly not going to be brave enough to pick a bottom in this market. Look at that. That is horrendous. Horrendous if you're long. Lovely if you're short. Yeah. I can't say any more. We've broken new lows. The last few weeks we've been hovering around 179.5-ish, and we've broken that again today. So really, if sell rallies, yeah, sell rallies. I mean, there's nothing else you can do. It's just on a massive bear trend. You've got to be very brave, or perhaps slightly foolish, if you're going to try picking bottoms in that. I mean, as we said earlier, do you consider the trend? Most definitely, I've considered the trend, and that is not worth fighting. There's better trades to do than try and pick bottoms in that market, I'm pretty sure. Interesting, that one. Okay, thanks for that. Do I need to go over anything that we've already looked at? Don't think so. Stock markets are easing off. Maybe not. 82, 83 the S&P now. Yeah, okay. I think we're getting close to the end, are we? If not, I will have a look at something else if anyone wants me to. New Zealand dollar, yeah, happily look at that one. NZD, New Zealand dollar spot. Here we go. Okay, weekly chart. Looking pretty good. Yeah, nice little uptrend there. Well, nice big uptrend really. The last leg of the uptrend's been going since the middle of last year. Really accelerated this week, so at the moment it's looking good. On the weekly chart, now that we've broken above 85.73, on the weekly chart at least, there isn't anything until the 88.44 highs. There's nothing in the way. Then daily chart, getting a bit overbought, but you know, being overbought alone is never a reason to sell a market. With broken highs, it's not wise to fight this trend really, I don't think. I'm sure the 4-hour chart is just as overbought, if not more yet. The 4-hour chart, okay, very overbought. Stochastics have turned negative. Even despite that, I certainly wouldn't be getting particularly bearish. I mean, all right, in the very, very short term, let's see where we could float back to. Stick some fibs on. Okay, so we could be looking at a drift back to 86.03, 86.00 sort of area. Yeah, that's definitely feasible. Bit of profit taking, why not? That's always healthy in an uptrend. 86.00 area maybe as far as we get if we keep going. 85.55 area, mid 85.50s looks like as far as we would go. Probably will be looking, well, we certainly won't be overbought at that stage. We may even be looking a bit oversold, and I would suggest maybe we could find a floor there around 85.55. If you were to buy it there and stop out below this fib level at 85.20, you know, you're risking sort of, what, 40 pips max. If you're prepared to risk 40 pips for the chance of it to rally certainly back up to 86.00 and possibly even further, then risk reward wise that might be a nice trade, depending on your sort of risk parameters. And then if we keep going lower, 84.83, 84.80 area looks very, very good support again. So that might be another place to try longs again. I mean, it's a nice uptrend. You're looking to buy into dips, in my personal opinion. And those would be the levels that I'd be looking out for: 86.00 area, 85.55. I wouldn't be surprised if we go no lower, as I say. But if we get below 85.20, I'm guessing the 84, 85, 80 area would be a nice purchase. We shall see. My pleasure. Any more for any more? I don't know if we can keep going. What is it now? 10 to. Maybe we've got another 10 minutes. I've just started looking at metals recently. Started covering reports on base metals. So if that's of any interest to anyone, let me know. Oh, sorry. Question. Where did you learn? Okay. Well, I read a ton of books, which isn't really the way to learn, to be quite honest with you. You've got to speak to someone who knows what they're doing, because you can read all the books in the world, but the problem is there's just so many different indicators out there that you could follow, and until you try them all, you don't know what works and what doesn't work. And for me personally, all that works is slow stochastics, moving averages, trend lines, Fibonacci. I just keep it really simple. I had a very good teacher, and but then, you know, a lot of it was just down to experience. I've tried a lot of things. I've been doing technical analysis for over 5 years, and I've just tried a lot of things. I've been a trader for 25 years, so I knew markets. And then, you know, it's like everything. The more you do it, I suppose. I'd like to think the better you get. I'd like to think I know what I'm doing, but who knows? Do I coach? I don't really, but if anyone wanted coaching, I would be happy to give it a go. I mean, it'd take a few sessions, I imagine. There's no reason why I wouldn't coach anyone. No, I mean, I used to teach people how to trade, so one thing I would be able to do is teach people how to trade and combine it with technical analysis. I mean, I think a lot of analysts haven't ever traded. Well, I traded for 20 years or more before I started looking at technical analysis, so, you know, I look at it. That's very kind of you. Thanks very much. Unfortunately, I'm 45 next month, so I'm an old man. But that's cheered me up no end. Thanks very much. Yeah, put myself in for the Botox for next month, so if I can keep looking 25. Yeah, no, I'll be happy to give coaching a go, though. I don't really know. I have thought about it, running some sort of courses or something from somewhere. I don't really know where I'd do it, really. Maybe I could do them from webinars. Yeah, maybe the bit was taken when I was 25. You're right. Now I've got grey hair or no hair. 45 is young. Well, I'd like to think that. I don't feel young. Maybe that's the two kids that make me feel old. Anyway, I think I'm wandering off the subject a little bit there. Okay, so that's the New Zealand dollar we were looking at recently, wasn't it? Yeah, big old uptrend. Not worth fighting. When I talk about buying dips, do I also take profits out along the way? Yes, I mean, I do look for levels to take profits. In fact, I'm probably guilty of taking profit way too early because I look for levels all day long. You know, I'm always looking to take a profit too early. I mean, probably what I should do more is use trailing stops. If you trail your stops and then just leave them just under the last support level, you're more likely to catch the big trends. It's a difficult one. I don't know what the answer is. I wish I did. I get out of trades too early. Well, I either get out of trades too early or I run them way too long. Unfortunately, you know, there's no easy answer. I'm not the best trader in the world. I tend to have a pretty good grip. Yeah, that's a great idea. Parabolics as a trailing stop does work very well indeed. I do agree. On the 4 hour, yeah, most definitely. You know, just looking at the 4 hour chart here, there you go. Look, if you'd have used them, you're absolutely right there. It's a very good observation. Look at this last chart we were looking at. You know, if you'd have used the parabolics on the 4 hour chart as your stop, you'd have ridden that trend nicely. So yeah, that's a really good observation there. And when it does break the parabolics, I'm just trying to highlight the parabolics there so you can see them a bit more clearly. When you do actually break the parabolics, you know, you do tend to get an extended move in the opposite direction. So, you know, what I'm saying is it will have been worth stopping out. Okay, got to go in 1 minute. Thanks very much. Yeah, they are actually used primarily as a stop. You're right, and I don't use them enough as a stop. So I appreciate that observation. I tend to use them as an indication of the trend, but I think their primary reason is actually to be used as a stop. So that's very useful comments there. Thank you. Do I scale in and out? Yeah, I do actually. I do scale in and out. I find it useful to do that if you can. Okay, thanks very much today. Appreciate it. I've got another one in a couple of weeks. I do really. Yeah, fibs. Definitely use fibs to scale in and out. Fibs, fantastic. They work. I really think. Okay, thanks very much. I've got another one in a couple of weeks, I think, so we can revisit all the markets I've just had a look at and see if I got any of them right. Thanks very much indeed.